Hey everyone, welcome back for another deep dive.
Yeah.
Today we're going to be looking at Contura Energy.
Okay.
And we've got a whole bunch of documents, actually. Public filings, investor presentations, all sorts of stuff.
Right.
And we want to try to answer the question.
Yeah.
Has the management team been able to execute
Okay.
on all the promises and guidance they've given?
I like it.
So Contura Energy, for those who aren't familiar,
Yeah.
they describe themselves as a Tennessee-based
Okay.
mining company.
Mm-hmm.
And they primarily focus on
Okay.
metallurgical coal production.
Right.
So that's the coal that goes into making steel.
Exactly.
I think that's one of the things that's kind of interesting about this company is that they've really been transitioning away from thermal coal, which is used for power generation.
Right.
And they've been doubling down on metallurgical coal.
Interesting. Yeah.
And so their operations are mainly in Virginia and West Virginia. Gotcha. But they sell their coal to customers all over the world.
Interesting.
So that's kind of the quick overview of Contura.
Yeah. So what kind of promises are we talking about here?
Well, let's dive into that.
Okay.
One of the things that they've really emphasized in a lot of their public statements is this idea of enhancing their capital structure.
Okay.
And improving their financial flexibility.
So basically shoring up their finances.
Exactly.
Okay.
And they've also talked about
Right.
plans for growth, through development projects, acquisitions, things like that.
Makes sense. So are they walking the walk?
Well, that's what we're here to figure out.
All right, let's get into it.
So let's start by looking at
Okay.
their 2018 performance.
Mm-hmm.
Because, on the surface, it looked pretty good.
Okay, what were the numbers like?
Yeah, so their coal revenues
Yeah.
increased by $265.3 million. Or 19.1% compared to the prior year.
Okay, so a significant jump.
Yeah, so they were selling more coal,
Yeah.
and prices were good, especially for met coal
Right.
coming out of the Central Appalachians.
Now, was that all organic growth, or was there something else going on?
Well, there was a pretty big merger, actually.
Oh, really?
They completed a merger with Alpha Natural Resources,
Okay.
and that gave them a much larger footprint in the met coal market.
Okay.
Particularly in the Central Appalachians.
So that merger probably played a role in that revenue increase.
Absolutely.
Okay.
Yeah, you can't ignore that.
Right.
But, mergers can be tricky.
Yeah, for sure.
And so, one of the questions I have is, did they manage to integrate Alpha smoothly?
Right.
And, did they achieve the kind of cost savings that they were hoping for?
So how did their financials actually look?
Well, that's where things get a little bit more complicated.
Oh.
So while their revenue soared in 2018, their debt and their interest expenses also went up quite a bit.
Interesting.
In fact, their interest expense in 2019 increased by 72.1% to $28 million.
Whoa, that's a big jump.
Yeah, so much for that financial flexibility they were talking about.
So what happened? Was it the merger?
Well, it seems like the merger definitely played a role.
Okay.
They took on a lot of debt with that acquisition.
Makes sense.
And they also, remember, they divested
Right.
some of their thermal coal assets.
Yeah, they were really trying to focus on met coal.
Exactly. So they sold off the Bel Air and Eagle Butte mines,
Okay.
to focus on met coal.
So you'd think they'd be in a better financial position
Right.
after selling off those assets.
We would think so.
But their interest expense still went way up.
Yeah. And they also mentioned in their 2019 filings that interest rates were a factor as well.
Okay, so it was a combination of things.
Yeah, perfect store.
The debt from the merger and rising interest rates.
Exactly.
Interesting.
Now, what about those operational improvements?
Yeah, what about them?
Did they actually make any progress on that front?
Good question.
So they did mention in their filings
Okay.
that they were centralizing some of their operations.
Okay.
They talked about setting up a centralized sourcing group
Gotcha.
to handle major supplier contracts.
Yeah, that's usually a good way to cut costs.
Right. Leverage your buying power.
Exactly.
But at the same time, they were also dealing with some
Okay.
pretty significant permitting and regulatory hurdles.
Oh, I see. So kind of a mixed bag?
Yeah.
What kind of hurdles were we talking about?
Well, they specifically mentioned difficulties and delays in obtaining permits for their operations in Virginia.
Interesting.
In fact, they even used the term permit blocked
Oh, wow.
to describe the situation.
So they were really hitting some roadblocks there.
Yeah, so it seems like they were trying to streamline things internally,
Right.
but they were also facing these external pressures that were slowing them down.
Makes sense.
So 2018 might have looked pretty good from a revenue perspective. 2019 was a much more complicated picture.
Interesting.
So what about their bottom line?
Yeah. Did they manage to stay profitable?
Well, that's where things take a dramatic turn.
Oh.
In 2019, they reported a net loss of $203.1 million.
Wow. That's a big swing from the previous year.
Yeah, massive swing.
So what happened there?
Well, a couple of things.
Okay.
First of all, their coal margins took a hit.
Right.
They dropped from $4.51 per ton in 2018 to $3.84 in 2019.
Okay.
And then, of course, those interest expenses.
Yeah, those pesky interest expenses.
We talked about earlier.
Right, those certainly didn't help.
Didn't help at all.
So shrinking margins, higher interest costs.
Yeah.
Wiped out their profits.
Basically. But we also have to remember that they were dealing with some external factors.
Yeah, those market challenges.
Exactly.
Yeah.
They talked about softening demand for metallurgical coal.
Okay.
Particularly in Europe and South America.
Interesting. And why was that?
Well, they said that steel production was slowing down in those regions.
So it's a ripple effect.
Yeah. If the steel industry is not doing well, demand for met coal is going to take a hit.
Makes sense.
And then on top of all that,
what else?
You know, the COVID-19 pandemic was starting to emerge.
Yeah, that was a curveball for everyone.
Exactly. So, you know, they were facing headwinds from multiple directions.
It sounds like they were getting hit from all sides.
Yeah. So, you know, it's clear that both internal and external forces were at play here.
Yeah.
You know, they made some progress on their promises, particularly with the Alpha merger. But they also stumbled.
Okay.
Especially when it came to financial flexibility.
All right.
And navigating a volatile market.
Makes sense. So what happens next?
Well, that's what we're going to find out.
Okay.
In the next part of our deep dive.
Sounds good. I'm intrigued.
So we'll see how Contura's management team responded to these hurdles.
Can't wait. So they were facing some pretty big challenges in 2019.
Yeah, they were.
How did they respond?
Well, let's take a look.
Okay.
You know, one of the things they highlighted in their filings was this idea of improving efficiency.
Okay.
They specifically mentioned the implementation of a centralized sourcing group.
Oh, okay.
And that group was tasked with negotiating major contracts.
Gotcha.
For supplies and services.
Yeah, that's usually a smart move, right?
Right.
You can leverage your buying power.
Exactly.
Hopefully get better deals.
That's the idea.
Did it work?
Well, it's the million-dollar question, isn't it?
Yeah.
The sources we have don't really provide specific data on the outcomes.
Uh-oh.
They mention the initiative.
Yeah.
But they don't say, you know, how much money they saved.
Right.
Or how it impacted their overall efficiency.
So a bit of a black box there.
Yeah, a bit of a black box.
All right. What about those permitting challenges?
Ah, yes, those permitting challenges.
They were permit blocked, weren't they?
Well, they used that term.
Yeah.
In one of their filings.
Okay.
But it doesn't seem like they made a whole lot of progress. You know, their subsequent filings continue to highlight the difficulties and delays they were facing.
So an ongoing issue.
Yeah, sounds like it.
And remember, they're also operating in a pretty volatile market.
Right, that's right.
The price of met coal goes up and down.
Yeah, it does.
Makes it tough to predict revenues.
Absolutely.
And to plan for the future.
It adds a whole other layer of complexity.
Definitely.
And didn't they mention that prices softened in the latter half of 2019?
Yes, they did.
Which must have made things even more difficult for them.
Yeah, they cited weaker demand.
Oh.
Steel production was down.
Yeah, particularly in Europe and South America.
Right, so they were dealing with internal challenges, regulatory hurdles, and a less than ideal market.
Yeah, talk about a tough situation.
So how did they adapt?
Well, it's hard to say for sure, based on what we have. They don't explicitly lay out any specific strategies for dealing with price volatility.
Interesting.
But, you know, their decision to focus on metallurgical coal could be seen as a form of adaptation.
Oh, how so?
Well, met coal is used in steel production.
Okay.
Which is generally considered a more stable and less volatile sector than, you know, the power generation industry.
Right, which relies on thermal coal.
Exactly.
So they shifted away from that.
They did.
Okay.
Interesting. And that could be seen as a way to mitigate some of the risks associated with market fluctuations. But of course, even the met coal market is not immune to global economic trends.
Of course not.
So, we're still just looking at the short-term picture here.
Right.
What about the long term?
Good question.
Have they given any thought to the future of the coal industry?
Like what?
The potential impact of things like the transition to cleaner energy sources.
Oh, yeah, that's a big one.
Green steel, all of that.
Exactly. So that's what we'll explore next.
Okay, sounds good.
We'll look at their sustainability initiatives, their stance on environmental regulations, and whether their actions align with a forward-looking strategy.
Yeah, because the world is changing.
It is.
And they need to be prepared.
Absolutely.
So we've talked about mergers and markets and all sorts of challenges.
Yeah.
But now I want to zoom out a little bit.
Okay.
And look at the bigger picture.
The long-term strategy.
Exactly, the long-term strategy.
Yeah.
How is Contura preparing for a future where the demand for coal might look very different?
Right, because the world is changing.
It is. Everyone's talking about green steel.
Yeah.
Cutting carbon emissions.
It's a time.
So where does a coal company fit into all of that?
Well, that's the million-dollar question, isn't it?
It is. It is.
And it makes Contura's story really fascinating.
Okay. How so?
Because on the one hand, they're all in on met coal, which is essential for traditional steelmaking.
Okay.
But on the other hand, they seem to be aware of the need to adapt and evolve.
So they're not just ignoring the issue?
No, not exactly.
Well, what are they actually doing?
Well, in their filings, they acknowledge the importance of environmental regulations. They mention things like CSAPR, the Clean Power Plan.
Oh, okay.
Matt DS.
You're going to have to break those down for me.
Yeah, all those acronyms.
Yeah.
Basically, they boil down to efforts to reduce emissions from power plants.
Right.
Many of which, of course, burn coal.
So even though Contura focuses on met coal, they're still indirectly affected by these regulations.
Yeah, it's all connected.
So they're aware of the regulations, but are they doing anything?
Yeah, that's the key question.
To minimize their own impact.
Good question.
Actions speak louder than words.
Well, the sources we have don't really go into great detail. They talk about responsible mining practices, meeting environmental standards. But they don't get very specific.
You'd think they'd want to highlight that stuff.
Right. Especially with investors and customers who are increasingly focused on ESG.
ESG, yeah, big time.
Yeah. So that lack of transparency could actually hurt them.
It makes you wonder, are they truly embracing this need for transformation?
Right.
Or are they just hoping that this whole green steel thing will just kind of blow over?
It's hard to say for sure.
It is, it is.
But one thing is clear.
What's that?
The world is changing.
Yeah.
The pressure to decarbonize, it's only going to intensify.
So Contura needs to adapt.
Absolutely.
So what does all this mean for you, our listener?
Good question.
Well, we've seen that Contura's management team. They've made some bold moves.
Yeah.
Like that Alpha Natural Resources merger.
That was a big one.
But they've also stumbled.
Right.
Particularly when it comes to financial flexibility.
Okay.
And really articulating their long-term vision.
In a world that's changing very rapidly.
Exactly. And, it seems like they've achieved some of what they promised.
They did shift to met coal.
Yeah.
They pursued growth.
They did.
But they've also fallen short in some areas.
Yeah, particularly around sustainability and that forward-looking strategy. So this deep dive has given you a glimpse into the complexities of Contura Energy.
Yeah, it's a complex story.
But as always, we encourage you to do your own research.
Absolutely.
Dig a little deeper. Look into their sustainability reports.
Yeah.
Their community engagement, their plans for the future.
All of that.
And ask yourself, do their actions match their words?
Good question.
Are they ready for a world where coal might not be king?
Because that world is coming.
It is. It is.
Faster than we think.
So the answers to those questions will ultimately determine whether Contura Energy is a company that's poised for success in the long run.
Makes sense.
And that is the beauty of a deep dive.
What's that?
It's not about giving you all the answers.
Right.
It's about giving you the knowledge.
Yeah.
And the tools.
The critical thinking skills.
To draw your own conclusion.
I like it.
So thank you for joining us.
Yeah, thanks everyone.
On this journey.
It's been a fascinating run.
Into the world of met coal and Contura Energy.
Absolutely.
Until next time, keep learning, keep questioning.
And keep digging out